All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, consider giving the video a thumbs up, like, comment, subscribe to the channel. Don't forget to come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Let's get into it this week. So we had a breakout here, and you can see Monday, a little gap up, and then kind of sideways throughout the rest of the week. And we are pumping a little bit here on CPI. S&P up 1%, triple Qs up 1.2, Russell up 1.5, and the diamond here up 1.15. That's pretty much all-time highs across the board, except for the Russell, which is just lagging a little bit behind here. And most of this to me is hedging coming off on CPI. Now it did come in at about 3%, which is about expected. I think it was, some analysts had it as a slight, ever so slight miss, like 3.0 versus 3.1 expected. But either way, it was pretty much right in line. And, so you're seeing the hedges come off and the market kind of get a bid here. But it's very interesting. There's a lot of debate going on right now. And, we're going to cut. Fed is going to be cutting 25 basis points next Wednesday. So we have the Fed this week. We also have Trump. Will be doing a meeting with Xi Jinping next week. I believe that's on Thursday. And we also have a lot of earnings on deck. So pretty much all the rest of big tech. We already got Tesla and Netflix out of the way, obviously. Both of those stocks did, Netflix obviously taking a hit. Tesla essentially flattish to where they, prior to where they reported. But then this week we've got all of the rest of the big ones, Google, Microsoft, Meta, Apple, Amazon, and then we even got some of the smaller ones, MSTR, Starbucks, Chipotle, and those other names, Coinbase reporting as well. So a lot of the crypto names there, I think Riot reporting as well. So either way, we should get those big names. We have the Fed, and we have, like I said, a meeting with Trump and Xi Jinping. So there'll be trade. There's going to be a lot of catalysts here for volatility. But the big debate right now is the Fed's cutting into 3% inflation. Again, so that's twice now that they're cutting into that. And the way the market seems to be taking it is like crack up boom, basically. That said, I think there's more to it. They haven't really mentioned this. Not that many people are talking about it, but I think a lot of it's related to the repo stuff that's going on. So quantitative tightening will be ending. More and more banks are coming out and saying that. I think Bank of America said it. I think UBS and a few others came out today and said that they expect it to end on Wednesday. So they're going to end quantitative tightening. And I think they have to, right? We've looked at the repo stuff here. The SOFR spreads have come in a little bit from what I can see. And I think that's just, maybe they've opened up their windows a little bit. I don't know if they're helping out with that, but and now they're starting to come back up now that I see this here. So that'll be interesting. So you can see a 0.13 here on SOFR EFFR. So interesting. Not maybe this isn't over with just yet, but it does seem that the Fed is caving to the repo markets. You can see an interesting one stock that I've been following very closely. It's a very important company, Blackstone, and the reason why they're important is, again, this is like BlackRock's. It's not private equity, so to say, but it's like a massive lender. You guys know their mission statement is to destroy the middle class. But you get the idea, though. Closing below the 200 here again, and a weak bounce today with the rest of the market rallying. So we're still not out of the woods here with some of this private credit stuff, if you ask me. KRE has held up. It did get a bounce. It has not negated that red bar. XLF has gotten a bounce. It is primed to negate that red bar, though. So XLF hanging in there. JPM, holding the 100-day. It needed to do that. So they have bounces. The HYG back above that trend line. So credit spread's a little bit better here. SOFR still a little bit of a problem, though. So there may be some issues moving forward here, but I think the Fed intends to fully plug it up here. At least that's the way it looks right now. And we'll see. Maybe the market, I'll say this right now, we have a gap up. We're above 6,800. I think we'll probably close the day just below that. There's a lot of calls that are set to decay right there. So they're decaying as I speak, actually. But nonetheless, we had a breakout. We're going to close it at a fresh all-time high. But I'll say this right now. You got, I would say 67.50 is going to be your support. That's about where your previous high was. That's where we gapped from. And on any dip, I'd want to see 6,700 hold. on the cash S&P. If that comes down and we lose that on some repo madness thing, or the Fed, I don't know, the Fed surprises, earnings miss, and look, the market took the meeting with Xi Jinping as bullish. What if they, what if they, what if they disagree again? What if they hate each other by the end of it? So there are, there's probably going to be some whipsaw next week. But I would want to see the market hold 6,700 on the cash S&P, yeah, especially on a weekly close. If it does that, it's fine to go higher, I would say. And again, right now we gapped through this trend line there, so that is a sign of strength. But yeah, that's what I would just say for the other side of things. Then yeah, that's really it. The market is that it had a consolidation. I was kind of in the camp that we would see a little bit more of a dip here, maybe even like at least like sweep the low. But I guess dips aren't allowed of more than 2%. So market continuing up here, and you continue to respect it until it ends. So I would just say, yeah, 6,700 right now. Yeah, that's going to be your big line in the sand on any sort of retrace or trap to the downside. And again, we have the Fed next week, so watch for that. So we could see stuff like that happen. Triple Qs here again. What a move up, almost pressing 620 at this point. And yeah, 610. That's a big level. And again, you'd want to see that hold on the downside. IWM obviously still hasn't broken out. Still got a lot of call interest at 250 to work through. But it's up. We'll respect it. Same thing with the Dow. And again, they hit that 458. They reclaimed it, and then back to look at the back test there on the 16th, and it went off. So charts working pretty much textbook. SMH new highs here, but not really following through much. Again, a lot of call interest at 350, so maybe it backs off a little bit into that. Intel had earnings yesterday, and the stock was a little bit of a sell the news there. So that is backing off and dragging the semis down a little bit. TXN also had earnings, and that took a little bit of a hit as well earlier this week. IGV still remains strong. Nice outside move here. Weekly chart, again, still very good. So I like cloud here. As long as it's holding, it pulls back to the 20 MA on the weekly, and it's fine. So no real changes there. Transports here are down on the week, so rejection here. So this is a sector that's not bullish. We'll talk about oil in a second, but that is the main culprit right now for this, if you ask me. So transports on the weaker side, and again, backing off of 16,000. Now we're going to go to bond yields here. So we talked about that SOFR spread, but let's talk about the 2-year, because the 2-year yield is flat today, and that's with rate cut odds going up to 95 or 98% or whatever it is. The 2-year yield is green on the week. This is with CPI at 3% and the Fed set to cut and then quantitative tightening. 5s, 10s, and 30s. 30-year yield is green with the Fed cutting. I'm just saying that the market can ignore it, but maybe it stops at some point. So all we do is we respect price until it changes. XHB up 53 cents. IYR trying to break out as well. So REIT's doing very nice here. Let me, before I forget, dollar yen. We'll talk about the dollar index, but dollar yen here also inching up towards a high, a new higher high. I would say 155. Above that could cause some forex issues. Well, before I forget about yields, but right now, it's trending up, and market cares, no one cares. All right, XLF up 1.35. We talked about financials already. There's broker dealers holding on to the line. Oil flat on the day, but it had a nice rebound this week. A lot of that having to do with the China and Russia sanction, but I also think it's the oil is front running like inflation, I think, and I don't know how anyone can't at this point. It's pretty egregious what they're about to do here. I don't think I need to explain that to anyone. So we'll see. I think oil here, and we'll talk about XLE. That is down on the day. So is XOP, but they are up a little bit here. Look at the monster in OIH right now. I think this here, watch this level, write this down, 38.22. If we close the month above that, that is a failed inside bar on OIH. I'll call this right now. It's going to 450, 500 if it does that. And Halliburton this week. Very nice. Finally, an impulsive breakout of this base here. So that was long overdue there. Big, obviously Halliburton, big name in OIH. And that's going to close the week above that red. So I think you can buy dips in these oil services names. But yeah, oil might have a little bit of a retrace next week, but I think this is setting up for a big year next year, midterm year too. Dollar index up 2 cents, hanging in there okay. So no changes there. Uranium name's getting a bounce. Look at CCJ. Look at that trend line, beautiful action. So nice retest there. It did, a lot of these Momo stocks really do look a little top heavy here though. Big reversal there on the weekly. You can see Aqua, everybody's favorite stock to chase. Big slice there. I had a slice a few weeks ago, new high, another slice. So, some of these Momo names, look at that weekly too. Some of these Momo names have run out of gas here and they may need to consolidate a little bit. So just throwing that out there. I know we haven't talked about uranium in a minute here, but they're bouncing and that's to be expected. Gold, again, big outside move here. CME hiked margin requirements. I talked about this last week, and I'm not surprised it overshot. I think this is also a signal that there's stress in repo, people selling winners, right? And that's where the Momo is coming. That's where that Momo stuff is coming from. And gold down. Look at GDXJ on the weekly. Nasty tail last week and follow through to the downside this week. So gold maybe finally getting ready to do some backing and filling. And, it was overdue, right? It was definitely overdue. This should continue to get some sort of a rebound here, but I think the most likely outcome here is a lower high at the moment, and we'll finally see some, it's consolidation here in the sector. It's a little overdue here. Silver down as well. Platinum, again, same thing. I missed it. I had a good day trade lined up Wednesday on this and kind of whiffed. I basically took a break even, like a 1 cent gain. But this was was looking for this 1500 handle and the 50 MA to get pierced. We got it, and then it kind of it did a little shake and bake on us intraday, and then it ended up going higher. But nonetheless, nice rebound there. Palladium, same thing, hitting the 20 MA. But again, really extended on the weekly here. But guess what? Look at that. It's holding the 200 week. Interesting. Trend is starting to turn up on these guys. And by the way, platinum and palladium, historically, they run after gold and silver. So they don't have to stop here. Not saying they will, but just throwing that out there. Copper back above 5, and that's reestablishing there. So I'm going to say look for this. If it can get above 515 or so, I'd say look for that to make a higher high. Why is it holding, like $5? A little bit of weakness here in Bitcoin. It's been stymied at these trend lines here. Look at the X marks the spot, bounce, and then retest the higher one, retest again. It's hammering on it though. It is hammering on it, so we'll give it some credit. But guess what? I mean, like this should be rallying hard right now. Intraday, this was the reaction to CPI, right? And then look at ES. Like it's going the opposite direction, right? So Bitcoin's still kind of weak here relatively. You got Ethereum here, also a little weak. So these might have a little test here at the lows. I would probably be a buyer if they can give us a little bit of a correction here, a little bit more of one, I should say. But anyway, we'll see what happens here next week. Again, a lot of stuff, a lot of catalysts, earnings, Fed, China. Should make for some volatility. Again, bottom line, I'd want to see 6,700 hold on the cash S&P on any sort of retest. Otherwise, that would indicate a big red flag. But right now, market's on breakout. Respect it until it fails. So anyways, guys, I'll wrap it up here. You guys take care. Don't forget to come find me on carnivoretrades.com. We'll see you guys all next week.